Today we're going to be looking at how to balance a checkbook. So the first thing here we are going to take a look at is reading a bank statement. So here's an example of a bank statement. When you have a checking or a savings account, you will either have access to your bank statement online or they mail it to you. So let's take a look at each part. The first part here, that is your name and contact information. And then right below it is your account number. You'll also see your account type, so if it's a checking account or a savings account. And then your current balance. So that's how much money you have in your account. Then the top section of your transactions are going to be your pending transactions. So those are ones that have not taken money out of your account or deposited money into your account. So they're still pending. Then you're going to have your bank information and your transaction history. Then right through here within your transaction history is going to be your activity dates. So when things were taken out. So a check was written on 4/30. And then let's see, a purchase was made on 4/17. Right here within your transaction history is going to be your credits, so money that is added to your account. So if you deposit a check, your paycheck, if you got reimbursement, or I guess a return. And then debits is going to be the amount that is subtracted out. So bills, checks, purchases. And then any fees. So you can have fees for overdrafting your account, which we'll talk about later. Or if you make a transfer, there might be a transfer fee depending on your bank account itself. And then lastly, within your transaction history, you have the date, and then in the same line of that date, it's going to tell you your account activity. So the description with either a credit or a debit. It's going to be one or the other. Let's talk about a check register. A check register is a record of each deposit made and each check written. So a new balance is called a running balance and is calculated after each entry. Each deposit is added to the previous balance, with each check is subtracted from the previous balance. So it's a running balance because it can change at any time. The balance is the amount of money you have in your account. So here, this is for a check register. So you have your check number, the date, and then the description. Then you're going to have the payment, if you're paying the check, or a deposit if you're depositing a check. And then you're going to either subtract out the payment with your balance or add in your deposit. So the amount of money on the same line is your running balance. So the actual balance of this checkbook right now is this amount right here, $1,527.37. Let's look at some examples. On October 18th, Rico made a deposit of $250 to his checking account that had a previous balance of $1,288.43. He also wrote a check, 67 to Mix Catering, for $78.50 and a check 68 to Bev's Tires for $143.78. We need to record each transaction and a running balance, and then figure out what the final balance of his check register is. So the first thing we're going to do is write our previous balance. Our previous balance is $1,288.43. When we write our transactions, there's two ways you can do it. If we go back, see how each transaction's on a single line. So you're doing the math all on one line. I'm going to walk you through using two lines so it's a little easier to see what is going on. So let's start off with his deposit. So on October 18th, so 10/18. Oops. On 10/18. He made a deposit of $250. So deposit is right here. So $250. There's no change. So, and that is just a deposit. So we can just write deposit. What we're going to do is we're adding $250. Now put your total beneath that. So $1,288.43 plus $250 is $1,538.43. Now we're going to use the next line beneath that. So he wrote a check, which was number 67. So check number, and it's on the same date. And it was to Mix Catering for $78.50. So that's a payment, $78.50. So remember, payments we are subtracting out, deposits we are adding in. So we are going to subtract that amount, $78.50. So take the balance beforehand, the running balance, and subtract out $78.50, and we get $1,459.93. Now we have another check, which was number 68, to Bev's Tires, so it's still the same date. And the check was for $143.78. So again, we're making a payment, so we are going to subtract out $143.78. When we subtract that out, we get $1,316.15. So that was check 68, and we just recorded each one, and the final balance is $1,316.15. Okay, let's look at the next example. Edwin Moss's check register showed a previous balance of $2,583.45. So let's write that $2,583.45 at the beginning of the week. On 2/2, he made a deposit. So let's write deposit of $1,220. So deposit we are adding. So $1,220. So we are adding that together. So we're going to take $2,583.45 and add $1,220, and we get a new balance of $3,809.45. So that was his deposit. He wrote a check, which the number was 105, to Spectrum for $121.85. So this is a payment. So we're going to subtract it out, and it was on the same day. So we're going to put 2/2. So we're going to take our balance and subtract out $121.85. And when we subtract that out, we get a running balance of $3,687.60. So that was Spectrum. On 2/3, so new transaction, he wrote check 106 to Duke Energy for $75.23. So we're going to subtract out $75.23, and we get a running balance of $3,612.37. That was Duke Energy. And then also check 107 for student loans. And that was on the same date. So 2/3. Student loans for $330. So we are subtracting out a payment of $330. We have a running balance of $3,282.37. And on 2/5, he used his debit card at Harris Teeter for $98.68. We're subtracting out $98.68. So we have our new total of $3,183.69. So that is his final balance. So one important reason to record checks and deposits and keep a running balance is to keep track of how much money is in your account. If you write a check for more money than the account then you will have an overdrawn account. Having insufficient funds in your account is called bouncing a check, and the money will not be paid to the person who you wrote the check for. Some banks will offer an overdraft protection. So when you end up bouncing a check, they'll pull that money from your savings account to cover. The bad thing about overdrawing is there's fees. If you have to pay a check that you don't have enough money in your account, you need to transfer money over. So you do not overdraw it and bounce a check, because you do not want to be paying more money than you have to. So that is your lesson on balancing a checkbook. Please reach out if you have any questions.